Hello everybody, today's video is on how to draw useful trend lines. And I say useful because I don't want to say right or wrong, because the real point of any tool that we use is to help us make money, to help us make better trades. So the way I use trend lines helps me make better trades. Now you may find that drawing them another way helps you, but what I find is that when I look at on Twitter or in groups, lots of people post pictures of trend lines like, oh, coming up to this trend line, or if it drops below this trend line, it's gone. And I find these almost useful, and they almost never work out from what I can see, because they have not taken a rule-based approach to drawing their trend lines. They're just drawn randomly. They've pretty much selected just a few points that meet what they think should happen already. So they've almost formed an opinion, then they draw a trend line to try to confirm it. And what happens is that if you draw random trend lines, you're going to get random results. Whereas if we draw rule-based trend lines that have very precise parameters, then we can actually go back and see how did these trend lines, how could they have actually helped us? How did these trades work out using these trend lines? Because we have a rule-based formula for creating them in the first place. So I'm going to go over my rules. There's not very many of them. It's very simple, but hopefully it helps you improve your trading and you find that the trend lines become more useful to you. And maybe if you've had bad experiences with trend lines or they haven't really worked, this will help. So first off, not everything is going to match up with a trend line. Like I said, we have a rule-based approach, and if I can't connect trend lines based on this, then I don't use a trend line. I'm going to trade off something else, maybe another pattern. So I trade off triangle patterns, and I'll look for consolidations, things like that. Whereas if I'm trading off a trend line, it has to meet these rules. So there's a couple places that we can look at this. I have an article on trading trend channels, and so it shows you how to trade off a trend channel. So if you just go to tradeThatSwing.com, you can put in the search box just trend channels, it'll come up. It's also one of the methods covered in my complete swing trading course, which is a full method for learning how to swing trade using a few different strategies. So here's a stock where we can look at, let's just delete this for right now. And what we have to start with is we have to pick 3 low points to start. And then what I'll do is I'll trade after the 4th touch. So you can see my little rules that I've written down here. Connect 3 lows, trade after the 4th. So we have a low here, and a low here. So this area provides our first little test. Notice this points, a lot of people would draw the trend line maybe like this, or they might be out like this, and then this one doesn't even touch. But this, we can see, is a low point. This is a low point because the price made a new swing high after it. It moved above this high point that preceded the drop. This one had a big drop, and then a new swing high was made after. This is a significant low. We want to include that low because the price made a new high after it. Now, notice this point. Visually, it almost looks like we should connect it to that point, at least to me. But this is the actual low point. So I want to make sure that that is connected. Now, we can look at these 3, and does my line connect all 3 lows? Yes, it does. It doesn't matter that it doesn't touch the exact highs or lows. If we were drawing, on a downtrend, we'd worry about the highs. But on the lows, they don't need to touch the exact points. What is a trend line doing for us? A trend line is telling us an area where we could potentially watch for trades. Then it's up to us to find an entry point. The trend line does not tell us when to enter, at least in my rule book. Trendline is simply a tool to alert me that there is a possible trading opportunity, and we'll show you how to do that. Okay, so now we just keep extending this out to the right. And we can see this actually did a really good job. I didn't make any adjustments to it. Just by connecting those first 3 and extending it out to the right, this did a very good job of highlighting the next opportunity. So that was 1, 2, 3. Now we're looking at trading the 4th. And we can see the price pulls right back into the trend line and takes off. So the Trendline Trend Channel Strategy article talks about possible entry points. There's a couple. You can watch for a consolidation around, or you can just wait for, sometimes I'll just wait for a 1-bar reversal, like what happened here. I wouldn't be trading at this point, but basically once the price starts to move back up, so on this green bar, I'm entering here, stop loss below, target up near the prior high. And I'll show you this trade over here when we get to it. Again, this one, pretty big reversal there, but also highlighted the reversal area pretty good. And it doesn't matter if the reversal point occurs just above it or just below it. Remember, the trend line's just there to help us. Now, what we want to make sure is happening is a new swing high. That should be between each low. This is for the uptrend. So let's just talk about uptrends right now. We'll get rid of that other one too. So we don't need to worry about it being at exact lows, but we do want a swing high between each low because we want the price to be making upward progress. If the price had dropped here, only gone up to here, and then dropped back below this point, we'd have to wait for the price to move back above the prior high before we could consider this trend line useful again. So this one did make a new swing high, pulled back. Then after this entry, the price made a new swing high again before the next pullback. Then it made a new swing high again here, just barely, and then pulled back to the trend line. So this one, this would have not been an entry right here, this reversal, because even though it lines up with the trend line, at this point, the price had not made a new swing high, right? So if we had taken this trade, we'd still be in it, holding the long position, but if you had missed it, you would not enter here because the price had not made a new swing high after the low. After this point, it does make a slightly higher swing high. Once it pulls back, you could consider an entry in this point. After that, the price does make a new swing high. This one doesn't really pull back far enough. You could have possibly got into this one, but I prefer waiting till it's closer to the trend line. All these other times, the price has touched our trend line, so this would be a little bit aggressive to trade that one when it's only fallen back. Another thing you can look at is how far were each of these declines. 7%, almost 8%, 9%, 7% again. This one looks much smaller, 4%. So this isn't really an alignment with any other of the declines that we've had, that we've measured out. So this was the decline we were looking at. This was the decline we were looking at. This one. This one. And we can see this tiny little guy, the price is just running away. So you could have maybe traded it, but I wouldn't have. Then this one I did trade, and I was again waiting for the price to reach the trend line area, and we have basically just a one candle reversal. So we drop, barely made progress below this swing low, and then we had a reversal back above this candle. So I didn't enter right away. I think I got in, actually I was probably on this day here, and I had just put out a limit order just sitting above this green candle because the price had made some nice progress above it. So I was like, below that low is a good place for a stop loss. If I can get in anywhere around this 152.85 mark, that leaves my risk pretty small. I'm only risking 2% on that trade, 2% of the price, and I could make even if my target's below the prior swing high, which is very conservative because every one of these other ones has gone, this one eventually went 15% above its prior high. This one went 9% above its prior high. This one went 9% above its prior high. This one went way more, 14% above its prior high. So a target could easily be put maybe even 5% above the high, which would still be pretty conservative up in this 180 area, or maybe even a bit more. And that would still be a pretty conservative entry point or a pretty conservative target for this trade. But at the same time, I know conditions are choppy at this exact time that I'm making this video. So I've taken a few of these trend channel trades with pretty conservative targets just up near the prior highs, and then can always look for another re-entry or another trend channel. These occur quite often, and this is how I draw them. So these are the rules. We connect the first three. So we need a low point, a second low point, and then a third low point. After that, once we extend it out, we can then start taking the trades once the price has come back to it. After it's made a low point and moved back up, it needs to make a prior high. So if this one, like I said, if this one had stalled out here and then pulled back to this point, we would not have taken this trade, or this would not be a valid entry area because the price hadn't made a new swing high. Let's look at another one. And I just have a few that I've been trading recently. So this one's pretty spread out, and you could have also drawn another little trend channel in here, which maybe would have provided some, short-term trades in here. But 1, 2, 3. This one makes a new high point. So this one wouldn't have counted. It would have been this one, that low point, that low point. This would have been our fourth little touch point on this trend line, but we get no reversal to the upside. So this one's immediately nullified. Then maybe we don't do anything with this trade for a while, and it doesn't show up on our radar until maybe down the road we see, and I'll show you quickly how to scan for these, is we have a low point here, we've made a new high, then we have a low point, and the price moves into new high territory again. So now we have 3 touch points. We want to make sure that our trend line's touching all 3. Again, it doesn't have to be along exact lows, but this one has to touch, and this one's running pretty close to through the middle. It highlighted the reversal area. Now again, comes back, touches our trend line, very close to it, and I'm just waiting for that little reversal higher. So again, this one had 2 little red bars here, popped up, got in right there, and again, we're only risking 2.5% to make 7%. Very conservative target again. I've placed it just above the prior high, whereas we can see when the price has made a new high, it's typically run a fair bit. From this high up to this high, it ran a fair bit. So we could be more aggressive with this target if we want, but for the sake of a trend line trade, what you do after it's up to you. But these kind of rule-based approaches to trend lines, I find, just really help me find the trading opportunities. And I also like this one because once I found it, can I use a conservative target to get at least 3-to-1 reward to risk? So here I'm getting in here, stop loss below. If the price even reaches the prior swing high, can it give me at least 3-to-1? And then, because I don't want to have to put it up way up here to get 3-to-1, I want a conservative target to get 3-to-1. That way I decide, hey, where did I have it? Yeah, right around there, just above the prior swing high. So that's pretty easy for the price to reach. And then if I decide later on, as the price approaches my target, okay, maybe I'll use a trailing stop loss, and the price could potentially run up here based on what it's done. Hey, that's just an extra bonus. I've made a few extra percent that when I started the trade, it still offered a great opportunity, but now that I'm in it, I can capture a little bit more. Let's look at, I'm just looking through some of the other ones that I have out here right now. Let's look at one that didn't work out, because this won't always work out. So here we have, let's delete these for a second. Low point, we did make a slightly higher high, higher low, higher high, and low. So this is our 3 points right there. Now we can adjust as price action unfolds. So here we have a low. Notice it does not undercut this low. If you look back at my rules, it said it cannot undercut a prior swing low. Otherwise, we basically start the process all over again. So if this would have dropped below this swing low, which it didn't, then this whole process would have to start over. This trend line would be nullified. But it did not. It made a higher swing low and continued to move to the upside. Then we obviously make higher swing highs in here. Even this one higher swing high here and a pullback. So these can all be connected in. This one, didn't do a fantastic job of highlighting the reversal area. But if you were looking at it from, what I discussed in the rules, we're still in the vicinity. We haven't made a lower swing low. So this is still a valid trading opportunity. There's no reversals in here. The first sort of transition we have is right around this area here, right at earnings. And I don't trade through earnings, so I would have been looking to enter after the earnings announcement, which would have been more over here. So the price would have been gone from the low point. But still, even with that all going on, we were within the vicinity of that trend line, and the only reversal signal occurred near that trend line and in our trading direction. New high, pulls back, swing low. So now we can connect this one, this one, this one, this one, and this one's still in the mix. The trend line's still reflecting that low, at least in my mind. Then we have this pullback again. Price makes a new swing high, swing connect in. And this would have been a valid trading opportunity. Same with this one. We have the drop back, transition up. So we could have put a stop loss here, entry point here, and then it would just be a matter of looking, does the risk reward warrant taking that trade? Just because the price pulls back to the trend line doesn't mean we just automatically take a trade. Here, we have obviously a new high. We pull back. Price doesn't make a new high here. This is the low point here. Price does make a new high and then pulls back. Here things get a little bit dicey because the price makes a new high and then pulls back again. So, but then ultimately continues higher. So you have a choice. You can continue trying to work this trend line, which actually does do a pretty good job over the next little while, but I wouldn't have been trading this one or this one simply because this one had undercut the low. And basically at this point we're now just moving sideways. So once it's undercut the low, I'm waiting for those 3 points again. And that's a low point, low point, low point, low point, new high, low point, new high, low point, new high, low point, new high. So all these line up. And remember, this one's no longer valid because we undercut that low that we had used. And so this is a really good trend line here. We can see the price is moving within pretty well-defined parameters on the upside and downside. Sometimes you'll notice they look a little bit better on a log or linear chart. I'll use them, I'll draw them on both, and sometimes one fits a little bit better. Log just means everything is scaled in percentage terms along the side, so a move from 5 to 10 is a 100% move. That's the same as a move from 50 to 100. Both are 100%. They'll both show the same amount of space on the chart, whereas linear is just moving, you're scaled at $1 at a time or whatever, and it stays constant. So here we can see just drawing this little trend line in here. 1, 2, we could even draw that one in there, 3, and that's how I'll adjust my trend lines. So the first 3, connected there. Then this was the next trading opportunity. Nice transition, shift to the upside there. But once that's in place, we can kind of fiddle with this trend line a bit, and just that, all 4 look nice and connected. And here, possible one, little bit of a shift to the upside there, but nothing really too compelling. I did like this shift here where we had the real pause. We got a couple very tiny candles and then a move to the upside. And the real allure to me was, being able to risk 3%. Even if the price gets up near this prior high, we're making about 17%. So even though this one didn't work out, no problem at all. Really solid risk reward opportunity. And sometimes you'll notice you could have drawn them slightly different. So I think probably how I drew this one the first time was more like this. And that's how I ended up taking this trade and not this one. So trend lines are a little bit subjective because, a slightly different angle will affect how you draw them. And that's why I like to make sure that after I have my fourth point, my 3 points, my 4 points, my 5 points, make sure that they're all connected and adjust the trend line a little bit as needed to reflect all that information, because that new low provided us with information. This low provided us with information. So we may as well adjust our trend line to that information. And by drawing it on this angle, we are reflecting all those lows. So this was, how I was looking at this trend line. And again, you could have probably kept this one going all the way through. This did undercut it slightly. But even if we had kept that one going, we can see we still end up with pretty much the same trend line and that same entry point. Because we want to include this one, this one, this one, this one, this one, this one, this one. Possible entry point. If you did get into this one, that would have been a losing trade, no problem. Remember, we're always I look for at least 3-to-1 reward to risk. That means even if I win 1 out of 3, I make up for 2 losses. And that makes it a lot easier to trade profitably. And 3-to-1 is the minimum. A lot of times I'm trading 5, 6, 7-to-1. And that makes it, if you have a few losers, you're not too worried. So this was a good entry point. If it had made a nice transition, and you could have possibly got in right there, which would have kind of sucked, but that's what happens in trading sometimes. Price has not made a new swing low. This was our last major swing low that we used in our trend line. So until the price drops below this, or well below our trend line, we can consider that trend line intact. Remember, we went a little bit below our trend line here. So a little bit below our trend line here still provided a good opportunity. Now it's fallen away quite a bit. We're almost near that prior low. So I would consider this trade done in terms of trend channels or in terms of a trend line strategy. This would basically need to reset up. We would need to have this low point, a move up to a new swing high, a pullback, move up to a new swing high for me to start drawing a new trend line. So this one's done. I'm not going to use trend lines on it anymore. It's not going to provide me any trading opportunities for trend lines. Maybe another strategy, but not for trend lines. If you want a real quick way to look for possible trades like this, I would use the channel up on FinViz. You can put in some other criteria such as volume, or maybe you don't want to see ETFs, so you only put stocks. And then just click on charts, and you have some great, so you can see some of these I definitely found on FinViz, so AMP, BG. I had a few other ones. BLDR was on here, the one we just looked at. So this is a quick way to find it. Now, FinViz does not use the same rules for drawing trend lines that I do. So I need to go through, but I can say, hey, AMP looks pretty good. It's making higher swing highs, higher swing lows. It does look like it aligns with a trend line pretty well. So I'm going to put it on my own chart and then draw my own trend line in. I'm not going to trust what FinViz has drawn. I'm going to draw my own. Then, to quickly go through these to find possible trades, if something is way up here, off its trend line, off the lows, I know I'm not interested in it because it would have to come back to its trend line. And I can see this is actually a fairly well-drawn trend line, it looks like, at first glance. That's the low point, new high. Yes, this one looks okay. So this would be the area where I'd be looking for an entry point, not way up here. So I can immediately discredit this one. I can discredit this one. This one, interestingly, I think I have on another trade, which has done really well. This one, near the lows, but it looks like it undercut the last major low, but didn't make a prior swing high, and it's come back. So this one's not of interest. It violates our rules already. So you can just look for ones that are near the bottom. So power recently, AMP, BG, near the bottom. I was looking through this list and I saw this looks like a pretty good trend line. AMP's near the bottom. Look for a possible trade. Power is another one. It's kind of pulled back to its trend line, but was another good trend channel possible trade. 1, 2. This is not 2 because it hasn't made a higher swing high. Right? Because it pulled back. This is just the movement up. In order to get a second point, we need to make a higher swing high and then pull back again. Here we make the higher swing high, pull back. New high, pull back. Then we can start looking for entry points. Boom, right there. Beautiful transition to the upside. Here again, beautiful transition to the upside. Now we've had a little bit of turbulence in here, but our entry point's still solid. This price still has a chance. It's still moving within the trend channel, even though we had this large drop. And you could possibly, like I said, this is just the method for trend channels. How you trade these is up to you. You could trail this up if you wanted. Now that we've seen the pullback, you can move your stop loss up a little bit to shave off a bit of your risk. But to me, I'm mostly just concerned about the risk reward. I'm risking about 3% to make 9% on a very conservative target. This is well below the prior swing high. This could probably easily go up here for a much bigger 4 or 5 to 1 reward to risk. But like I said, at the time I'm recording this, market's a little choppy, so why get greedy? Take 6% here, 6% here, 6% here. That's what, most people expect to make 6 to 10% a year in, their index funds or whatever. So if I can make 6 or 7% in a couple weeks when the market's not very good, hey, that's great. So this is how I do it, and that's the rule-based approach. This one's nice and has a couple things already written down there for you. And hopefully that helps you out with drawing the trend lines. Let's just go back real quick. I think it was on BG, or was it AMP? Just to show you the rules there one more time, how I draw the trend lines, and hopefully that will help you make better trading decisions, better trades with your trend lines. Until next time, happy trading.